Clifford Bennett, Herston Economics. And it's getting harder and harder to have something new to say as our expected bull market continues to unfold exactly according to plan. Oil's still a little bit volatile, but I think it might have bottomed yesterday. I think you start to buy into the oil market now. Certainly if you move above yesterday's high, today, tomorrow, the next day, I think that's a pretty strong signal that oil has bottomed. Gold looks great. We've got another little bit of a burst to the upside in gold. That's going to continue higher. Generally, commodity prices have moved higher over the last 24 hours as we're expecting alongside equity markets. What's quite interesting about this, although also on the day though, is that China raised interest rates. And that lifting of rates normally a month ago, 2 months ago, even a week ago actually, but certainly all of last year would have seen everyone going, oh no, the Chinese economy is going to implode because they've raised interest rates. China's economy is so strong it doesn't matter how much they raise interest rates. Everyone's just out to make a dollar. It is, if you like, the ultimate example of pure capitalism at the moment, and greed and enterprise and aspiration are what drive the Chinese economy, what drives the Asian economy, and what drives the Latin American economy. I know I've said it before, but really this is what Herston Economics, or I myself, have been calling for some time now, a bottom-up economic revolution around the world. It's about individuals, small businesses getting on with making a profit, and they're all keen to do so, and it's regardless of what political leaders or central banks are doing. So, classic example of that, if you like, it's the new paradigm in financial markets. The new paradigm is, as of yesterday, that markets rally even on negative news. And when the news is good, they accelerate. It's a grand bull market. What's happened with this new paradigm, if you like, of China can raise rates but commodity prices rally, equity markets rally just the same, is an increasing recognition of the underlying reality, which is this year being one of the strongest periods of economic growth the world has ever seen. This will be phenomenal. Global corporations in the US are suddenly starting to realize they've been a bit slow off the mark, and they're going to start to invest, hire more people, seek to expand market share rather aggressively this year when they were playing defense last year. So the economic boom is going to gather pace. Equity markets, commodity prices don't even begin to reflect this reality that's been there for a year now, but will be accelerated by US corporations recognizing it, by European corporations recognizing it this year, will be accelerated to a degree that we haven't seen before. Herston Economics global growth forecast for this year we set last year for 2011 has consistently been 5.4%. We said 4.7 last year, we're pretty much right. We're saying 5.4% this year. We could be wrong this year. I'm worried that that number is too low. We're at the top of the consensus profile. I'm worried that number's too low. I think GDP growth could move higher now beyond 5.4% this year. You've got to buy, you've got to invest now. It's almost too late to invest, but not quite. You've got to be quick. Bullish markets set to continue and accelerate.